Good evening, everyone. This is Srikanth Rajan, and welcome back to Market Pulse, where we discuss about what happened in the market last week and what could be expected next week, and how we should align our investments in line with the markets. So, of course, MPI Invest is your one-stop solution for all your investment needs and protection needs, like your investment into mutual fund, a SIP, FD, a recurring deposit, or even a bond or sovereign gold bond. This is one place, and not only that, we also help you with your health insurance and your life insurance, with helping you with the right choices. So do come back to us for that. So coming to talk about the markets. So markets, as discussed last time, of course, we did not have the podcast last time. We did have, the podcast which is posted last week had some issue, and that had to be taken off the YouTube. So, well, after that, whatever we discussed, so that's exactly what market has happened. Like, market was volatile, but too volatile, more than expected, in fact. The markets, of course, being a monthly expiry, the volatility was on the peak, but along with that, the major hiccup was from HDFC Bank, which kind of brought a big negativity in the entire banking sector. So we could see the entire banking stocks falling. Bank Nifty is down by more than 4,000 points. And Axis Bank is also down. HDFC Bank, which is the topmost weightage in Indian stock market, is down by more than 15%. So this is something which kind of rocked the market at this point of time. But if you look at a quick look at what happened last year, if you see, the banks have actually rallied up really well, especially the PSU banks. Now, why did the PSU banks rally up so much? Is it because the PSU banks have outperformed the private banks? Definitely not. So, for people who have not been in the market, may not know this, but those who have been with the MPA community would know this. The government had set up something called as a bad bank. Yes. So, this bad bank was set up mainly for the rescue of these PSU banks. PSU banks like SBI or PNB. So, all these banks had huge NPA. What is NPA? Non-performing asset. So non-performing asset is nothing but somebody's taken a loan from these banks and they've not repaid it, and that is actually holding back the profits of the company, because whenever the balance sheet comes out, it shows your expenses, your revenue, and your profit before taxes, and because of this huge NPA, that was kind of reducing or showing lesser profit in the balance sheet, and that was kind of spoiling the books. So this bad bank was a bank separately set to clear up all these NPAs from the books of accounts of these PSU banks. They would focus mainly on getting this NPAs retrieved, and trying to recover all these NPAs, and that would clear up the books of the PSU banks. So that's exactly what happened, and the PSU banks have seen a huge rally because of this book clearance part. But will this continue the next year? I am definitely not expecting so. So, of course, always the private banks will outperform PSU banks, but then banks like HDFC and Axis Bank are banks which are so big that they can't even fail. So, in this kind of situation, HDFC Bank or Axis Bank or SBI are banks which will be supported by even the government, and they will make sure that they will not fail unless the economy of the country fails. So, these are kind of stocks that people can invest for long term with a very low risk that can help them, make some decent return. However, this is not a recommendation. Do your due diligence before investing. And so that is what happened in the PSU banking sector. And private banks have done decently well. The NPS have been reducing, but there is a question mark. Yes, if you see off late, the Indians have actually started borrowing a lot of money, which is not good for the economy. So that is something which is kind of bringing slight fear. And if you see, even the RBI is taking some actions to kind of reduce lending. So that is something which is kind of putting some pressure on banks. Along with that, if you see, when HDFC Bank results came, they have actually increased the reserves. Increase the reserve means what? So reserve, now just imagine your own personal life. We've discussed this earlier, but I'm just telling you again for members who have not heard of it. So when would you think of keeping some reserve or emergency fund? Or you have an emergency fund, when would you think of increasing it? when you're expecting something bad, right? Or you think that, okay, there is a recession going on, so I might lose my job. So till the time I find a new job, I will need some extra fund. So I will kind of increase my emergency fund, right? So this is exactly what has happened with SDFC. Though the results were okay, they have not shown a mega great result, but results were okay. But provisions, which is nothing but the reserve funds, have been increased. So that people kind of feel that probably this can, be because they are expecting something bad. May or may not be, but then that is something which has kind of troubled the people. And let me tell you something, HDFC Bank is one bank which has our largest retail exposure. Yes, they have very less of corporate exposure. So comparatively, I would say it is still okay compared to PSU banks, because if you see, most of the big defaulters or on NPAs are by corporates. And since HDFC Bank has a very low, exposure to corporates, it is much safer, because the retail people like us always look at repaying all the loans. We are scared about a CIBIL score and all that, is it not? So that is how these things get affected. So retail people are like that. Whereas for a company, or a private limited company which actually takes loan and the NPAs get into their accounts, they really don't mind, because owners would float another new company and start taking another loan. So, I mean, keeping it on a lighter side, this is how things work in India. So that is something which kind of probably spooked the market, and HDFC Bank has taken the entire banking index down with it. And that is what has kind of given some fear in the market. And because of this whole thing, the market was entirely jittery. If you see, the major things which are affecting the positivity of the Indian market were two things. One, FIA started buying. Two, the three state elections where BJP came in stronger. So these are two factors which kind of gave more confidence to FIAs also. I mean, that there would be a stable government probably. That is the expectation. And FIAs have pumped a lot of money. But then in the last few weeks, there was also this rule by SEBI where FIAs had to declare their holdings if it is more than a certain percentage in each stocks. So that also had a major rejig in the market. With all this, the markets have been very, very volatile last week. Now, this is something which I always say, I'm repeating it again, SIP your investments. So that's something very important. Systematically invest part portion of your investment in a regular basis, and don't look at all these things, because that will definitely grow. In fact, there was a recent survey that came out that said over a period of 7 years of your initial state of investment, you're investing into equity market, there are chances that your portfolio can see a negative. But after 7 years, even if there is a major fall, generally the negative is not seen, though the portfolio may come down, so the negative may not be seen. But then if you're looking at a long-term investment, definitely there's no better option than equity. And when you're looking at equity, no better option than India at this point of time, because the kind of growth expected in India is amazing over the next 10 years. Now, talking about last year, now quickly let me tell you, this week is of course the budget week. So markets are going to continue to be volatile. And on the day of budget, that too on the expiry day, that is Thursday, the markets can have violent moves. So I would suggest traders, short-term traders, to kind of stay away from the market. And it is not a great time to be investing, not a great time to be trading. So investors, you really don't have to worry, because you are looking at a long-term view. But if you look at last year, what happened? So first thing, as the US interest rates started going up, right, the Federal Reserve started raising interest rates because the inflation went up in US. And when that happened, the entire US stock market started falling. And because of which, there was huge weakness in the IT sector in India. So if you see in companies like Infosys, TCS, Tech Mahindra, these are all people who give services to these IT companies. So if you see, India does not have in most of the big IT companies in India, they don't have their own product, but they support certain companies, right? So if you see US, there are products like Netflix, there is Facebook, there is Microsoft, there is Apple. So these are all individual products by itself. But then if you look at Infosys or Tech Mahindra or TCS, they don't have such a product. They are more like a support system to the IT sector. So when the entire US markets and European markets are falling, naturally they had to fall. And that's exactly why the IT sector had actually corrected big time. So that correction is what has seen a rise, especially after the Infosys result which came in. There was a feeling that, okay, now US markets are stable, and Infosys results also were not that bad as it was told or expected. So overall, people started seeing a big IT push. So we could see the IT actually moving up and supporting the market. But if at all IT had not supported when the HDFC Bank fell, we could have seen the Nifty actually hitting for at least 500 points more downwards. So that is some good thing at this point of time. And if you look at last year, one of the most important index which is actually scaled up silently in the background is the real estate index. So we had invested in few stocks like Brigade Enterprises. We had also invested in DLF. All these stocks have actually done really well and have given us very good returns in the last year. We've of course moved out of them and kind of now moved it to small cases and other managed products. But of course, this is one index which has given amazing returns. So this could be something that could be continued to be tracked, because as India as a country develops, sectors like real estate, infrastructure related, and also IT and all these sectors, FMCG, and in FMCG especially, if not only the consumables but the luxury consumable companies, these are companies that can actually give amazing returns over the next few 5 to 10 years. Also, there was this report by Goldman Sachs that said that how the income of people in India is growing and the affluent people in India is actually growing. So that is something really good. So all these sectors could be in focus in the upcoming years. And based on that, of course, banking sector will continue to recover also. So last year, it was mainly because of PSU banks. Support was from PSU banks and majorly from the IT side. Not IT, infra side, that actually pushed the markets up. But then there is a huge underperformance in IT sector and FMCG, common FMCG sector. So these are two sectors which can actually kind of recover. So these are few things that can be seen in the upcoming months, could be focused. And of course, the major focus would be on the budget this week, along with some major results like ITC and Tata Motors. Tata Motors has been having its dream run in the last 2 years. So of course, these are two stocks which even ITC has had a dream run last year. So both of these two stocks results would be mainly in focus for this week. So apart from all these, when all these events are here, there's also the Fed meeting, Federal Reserve FOMC, Federal Reserve Committee meeting, monetary policy meeting, which is also happening in the US, which would be again anticipated highly, though it is not going to have any rate hike. But people will look out for comments on when the rate cut can start in the US. If at all they announce in March, then there could be a big rally in US. But at this point of time, Indian market has majorly down because of HDFC Bank, which should start recovering soon. But however, rally is not expected unless there is some real big trigger from the budget. So two major things to be in focus for a short term. One is budget, and second is of course announcement of the next election. So it should be sometime soon. So by May or April or May, something that it is expected. So when the date comes, we could expect markets to get on a slightly tighter mode, and that could probably even increase volatility as well. So the period ahead is not looking very cool. But of course, this is again for a short-term purview. But for a long-term purview, markets are looking excellent. And of course, you should stay invested and continue to stay invested, and do plan your finances and allocation of assets well, so that you can have proper returns even when the markets are volatile. So that is something very important. And of course, to help you with that is what we have brought the financial planning tool for you. So all you need to do is schedule a meeting with us at mpiinvest.com on the website mentioned here, and we do a complete financial planning for you to help you plan your investment right. So that's it for now. I think I've given a lot of details for the week. This is Srikanth Rajan signing off. Until we catch up with more details tomorrow morning, goodbye. Oh, hey, I forgot to tell you. So on Friday, the Indian markets were closed, but US markets were open. So US markets have kind of been flat. And yes, there is a news that LIC has got permission to increase its stake up to 10% in HDFC Bank. Now that can be seen as a positive. So will HDFC Bank actually open gap up tomorrow, and will there be buying in HDFC Bank, and will that take Nifty up is the questions that we need to watch for tomorrow. So let us see how things go, and wishing you all a great budget week ahead. So with that, this is Srikanth Rajan signing off. But before you leave, of course, do remember to press the like button if you love the content that we share. That of course motivates us, and do share the podcast with your friends and relatives to help them learn and invest together with us. And of course, do refer us to your friends and relatives if you love investing through us. Thank you.